Happy Friday to everybody. My name is Brent Moore's time for advanced option strategies. We do this time each week, and just glad you're here. Today I want to talk about some common entries, very common entries that traders use, not just for advanced options trades, but it's something that I haven't actually talked about in this webcast in a long time. So at least to the extent that I'm going to talk about it. So I think it's probably important. So, namely, I'm going to be talking about flags and Coholds today. And that applies not just to advanced option strategies, it can apply to simple option strategies. It can apply to stock strategies as well. So they're just potential entries. It doesn't mean you need to do them. Doesn't mean it's going to, the trade's not necessarily going to turn out great if you do them, but it's just a common strategy. And if you are watching our webcasts, whether it's my webcast, Connie Hill's webcast, Ben Watson's, whoever's webcast, you're not going to go very long without hearing the term flag or CAHOLD. You'll hear one of them. So that's what we're going to cover today. I'm joined by Connie Hill in the chat, helping me out. And so as you have questions, between Connie and myself, we'll do our best to help you out on that. So Connie is very knowledgeable on flags and Coholds, which is what we're going to be talking about today. So feel free to type in those questions. You can follow either of us on X at Brent Moore CS, at Connie Hill CS. And remember, options do carry a high level of risk and are not suitable for all investors. And the information today here is for general informational purposes only. It's not a recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis, which we will be doing today, as the sole means of investment research. The paper money software application is provided for educational purposes only. And all investing involves risk, including loss of principal. I may not factor in commissions in all these trades. Realize they are a thing to consider, commissions and fees. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. And there's no guarantee of an execution of a stop order that it's going to be at or near the stop price. It is, yeah, the market. Let's take a look at the market here. Chris said, well, it's kind of a down day today. And yes, it is. And so not many Coholds today. Well, we'll see. We'll talk about what that is and why Chris is saying that, because there is a lot of truth to that. Hey, I see a lot of familiar faces in the chat. Well, I'm just glad you're here. When we trade, there are directional strategies and there's non-directional strategies. That's one of the kind of nice things of options. There's pros and cons. One thing is there's option strategies if you don't think the stock is going anywhere, if you don't think the underlying stock is going anywhere. You can do iron condors, you can do butterflies, you can do calendar spreads. Those are all kind of non-directional strategies. There's directional strategies too. And so, for example, well, just a long call or long put is very directional, although we don't deal with those as much singly in this class just because it's an advanced options class. So usually we're doing spreads of some sort. But you can do things like a diagonal spread. You can do like a skewed butterfly that make it more directional there. So what do you look for? For a non-directional trade, that is a stock that's going sideways. Generally, very often you'll look for a stock that maybe is in a channel. Okay, that's what a lot of technical traders do, at least. Okay, again, there's more than one way to trade, but a lot of technical traders will look for stocks that are in a channel, that they're not trending very far, with the assumption that that channel may continue, or the trends, it's still not going to trend in the future, and therefore the past may, no guarantees, may be indicative of what it's going to do going forward. Okay, but sometimes when we do directional strategies, we look for things like the trend going up. Here's the SPX. This is the S&P 500. You can see the big drop that we had today, down almost 2% today on that S&P 500. I imagine if I were to pull up the NASDAQ, it's down even more. Yeah, down 2.2% right now. And so big drop off on here, but the general trend has been going up on these. Okay, and so that's one of the key things that we look for. But in terms of actual entries, very often what we'll look for, what a lot of technical traders will look for, are flag patterns. They can be bullish flags or bearish flags, and a CAHOLD or a CAHLOD, which is, I'll talk about what those are in case you're not familiar in just a little bit. But let's start with flag patterns here. Okay, so let's just kind of look at the, actually before I do that, let me go and I'm going to just pull up a whiteboard. Okay, let's just kind of draw it out right now. When a stock has been trending up, you'll know it doesn't just go up in a straight line, right? It goes up and then it kind of pulls back a little bit. And this is a generally uptrending stock, and goes up and back and like that. Okay, and then if we're looking at the stock right here, perhaps we may go, well, look what it's done in the past. It's kind of gone up and then it's pulled back and up and back. And so some traders may go, well, I think that maybe this is going to bounce up here. This is what we're calling a flag pattern, a bullish flag pattern. And if you reverse this, you could see the same thing if the stock is going down. It goes down a way and then goes up, and then so then that's a bearish trend. But in this bullish trend, and if we're looking at a flag, what's the flag? The flag is this. It's when you have a low point and it goes up like this. Okay, and we're going to call that a flagpole. Okay, and then the stock kind of goes down or sideways for a little bit, and then at some point it kind of breaks out of that. Okay, so if we're kind of zooming in there, that's what we're looking at. That's the flag pattern. So if we get to where the point is where we deem it to be kind of the bottom of where that new flagpole is going to be. This is the pole right here. This is the flagpole, and this is the flag. And you can kind of envision, maybe you're thinking of a flag that's kind of tilted over. Maybe you're thinking of, I think of like Iwo Jima, the flag, they're lifting up. The soldiers are lifting up. It's kind of tilted over, right? That's kind of one way you can kind of visualize the flag, I guess. But that's what we're talking about on a flag pattern, okay? And so typically we try and get in at the bottom of the flagpole, and then sometimes we'll just kind of even set a target perhaps near the top of the flagpole. But if it's pulling back in the flag, we may wait for the breakout, or we may look for something else, such as a Cohold, to get in there. So let me just go to real life here and get out of my little drawing tool and move this out of the way, and just kind of look at the SPX here and see if we can identify where we may see what a flag looks like. So flag, remember, we have kind of the low and it goes up, and then it kind of has this period of pullback, right? So there's our flag. That's a flag, okay? Stock goes up and then it pulls back. That's kind of a flag. And then it goes up. This one wasn't a real steep increase, but then it went sideways. That's kind of a flag. Up and then kind of sideways. That's a little bit of a flag. So that's what we're looking for when we're looking at a flag pattern. Let me look at some other examples here. Let me go and let's look at AMD. How about? Okay, here's AMD. AMD has been killing it lately, going so strong. Now they have earnings coming up, but look, can you guys? Did I say I may have said the Army, the Marines. Okay, sorry, Chris. There, if I got the wrong service there on that, the Marines, Iwo Jima. Okay, so let's think of let's look at this. Can you guys pick out kind of where you identify a flag? Where was the flag on? Well, you may look down here. There's several. Okay, went up, kind of went sideways. There was a flag, and then we had the breakout right there. Okay, repeat, rinse and repeat, so to speak. Okay, and so we've pulled back. Now, has it broken out yet? No, we haven't broken out yet. And will it? I don't know for sure, of course, but that's what we've done in the past. So that's a kind of an example of a bullish flag that you can see on that. Let's talk about bearish flag. Can you do a bearish flag pattern? Yeah, sure. Let's look at Adobe. Adobe has not been having great times. You can see it's gone down. We actually have a trade on here. We have a stop above. This was more of a bearish trade, I think. But we can kind of look on this and identify, here was the flagpole down, upside down flag, bearish flag, okay? And then it goes, this was a short little guy there. And then it went down like this and started a new flag. So flags can be bullish or bearish there, bullish or bearish. So once you have the flag, and I'm going to kind of mostly talk bull flag mode here today, even though, yes, when we look at the overall market, no doubt today is a down day on this. Now, at a certain point, it may, the stock, if you're looking at an individual stock, okay, so here's SPX, this is an index. At a certain point, if you're looking for a flag and it goes down a lot further than what you'd expect, then, in other words, like here was my old flagpole. When this flagpole, when the flag goes down all the way to where the prior flagpole is, a lot of people wouldn't even consider that a flag anymore. They're a flag pattern. Well, we may still get a bounce, but it's not really the flag we're looking for. But sometimes if the pullback isn't quite as great, then what we may see is we may look for that flag. I think we already looked at AMD, I think. And so you can see here's the flagpole and here's the flag. We may look for a bounce here on this. Do we have to have the bounce before we put in an order for a trade? No, we could put in a trade that's contingent, a trade that, an order that will only fill if the stock actually bounces up. Okay? And there's a survey link in the chat if you guys, we'd love to have your feedback on that. I'm going to avoid this one just because we have earnings. Last week, by the way, we did a couple earnings trades, a couple trades that were specifically geared towards earnings reports. We'll look at those at the end of this session here today, okay? Just see how we did on those. One was a winner and one was a loser, I think, on those, but we'll see on that. When we're looking for that bounce, and we're looking for that entry, there's different ways to do it. You can actually physically like draw the flag on there and look for the break above it. Or what you can do is you can do something like, let me just do, we'll throw in GE here. Okay, here's GE. Or you can go, hey, look, I want the next candle to show the actual bounce. Or let me show you actually, let me show you a different one. Let me come back to GE. Let me go to NVDA. These are, I try and pick examples for the most part that you guys are familiar with and that are liquid stocks. But what we may look for is what we call a CAHOLD. Okay, so we got the flag down, the general trend up, pull back is the flag. But we may look for what's called a CAHOLD, a close above the high of the low day. It's a three-step process. So what we're going to do is we're going to identify the low day. Well, right now, this looks like the low day. We don't know for sure. Tomorrow may even be lower for all we know at this point. But as we go back, you can see, oh, here was a low day, okay? In other words, this was the bottom of a drop. This was the bottom of a drop. And the day after it, the low on this day, for example, where I'm pointing, was right there. That low was higher than this low. This low was right there. And this low was higher. So this was a low day. And if I go back, where was this at? Technically, this was actually a little bit of a low right there. But going back, oh, here was a low day. Okay. The day before it and the day after it, the lows were higher than that. Here was a low day. The very low of this day was lower than the day before it or after it. So you can kind of identify those low days. The bottom of the bounce, okay? The bottom of the bounce is those low days. That's what we're looking for. So that's the first step. Identify the low day. It's a three-step process, okay? Find the low day is the first one, okay? Second step, check where's the high of that low day. Well, if indeed this turns out to be a low day, again, we don't know until tomorrow what's going to happen, but here was the high of that low day. I'll just draw a little line right there. That's where the high was, okay? If I go back to this one back here, back to this one, where was the high? The high was right here. Okay? That's where the very top of the candle, okay? Very top of the candle. So the very top of the candle would include the shadow of the candle or the wick of the candle. Any of the highest points sticking up on that candle is what we're going to consider the high of that day. So step one, identify the low day. Step two, find the high of that low day. Find the high. And then step three, look for either a close or a bounce or a move, intraday move. Sometimes people will call it a CAHOLD, a touch above the high of the low day. A move above this price would designate this potential entry signal, okay? I say potential. People do it different ways. But as far as the process that I am teaching you today, we're just looking for a move above here. So we can find out what this price is, and we could put in an order that says, I'm going to get in if we break above that price. Okay. Any questions on that right now, feel free to type those in the chat. That's what we're talking about with a CAHOLD. Now I'm going to come back to a CAHOLD here in a sec, but let me just mention this can be done in reverse as well. And if I go to, let me go back to Adobe. This is a stock with a nice downtrend. It's harder to find stocks that are downtrending, at least more liquid, bigger stocks right now, because the market for the most part has been going up. Today, that's the exception. Today, most stocks are going down. But the general trends of these, as we're looking back a month or two, we see them going down. But if I'm looking for, instead of a close above the high of the low day, and you're looking for a bearish trade, sometimes we'll look for a close below the low of the high day. In other words, again, it's a three-step process. You find the high day, okay? Here was a high day right here, for example, going back in time right there. We had a high day right there, okay? So I'll do these, close below the low of the high day. So first we're going to identify, I'll just write ID. I'm going to abbreviate just a little bit here. We're going to ID the high day, okay? ID the high day. That's the first step. Second step, we're reversing it. Remember, when we were doing a close above the high of the low day, we're identifying the low day. Here we're identifying the high day. And then what we're going to do is we're going to find the low of that day. So then we're going to identify, again, I'll put ID, the low of that day, okay? So on this day, where was the low? Low was right there, okay? That was the low of that day, right there. So if we're looking for this bearish trade and we're looking to get in, we identified the high day, we see the low, we're looking for a break or a close below that, and that's right there, okay? That'd be right there. So that'd be step three, okay? We're gonna look for, okay, I'll say break, but you could say a close, okay, below the low. Okay, let's see if we can see some other areas on this chart there. All right, so Myron, hopefully this helps you out. If you guys want to take a screenshot of this would be for the close below low of a high day. If you're doing a CAHOLD, you just change everywhere it says high to low, and everywhere it says low back to high, and that would give you just the reverse here. So that would be a CAHOLD. Let's go back. Let's say we were looking here. Where was our high day here? I'm gonna zoom in. I'm gonna erase this because I have to erase it to zoom in. So hopefully you've taken your screenshot there at this point. Okay. Let me go here and let's just kind of zoom in. Where was our high day here? Well, look, this little wick, this little shadow right here peaked above everything right there. That's where our high was there. So if we're looking for a close below the low of the high day, did we get a close below that on this day? Well, here was our low right here. I don't think we closed below it on this day, but we did the very next day, okay? We did the very next day. So the next day isn't always going to be the day where you get close that, below that. Now, if you wait 5 days, 10 days, Are we still going to, no, the pattern's probably changed at that point. So let's go back here. Let's look at a trade here and do a trade. I'm going to go back to NVIDIA. I'm going to go back to bullish mode, back to CAHOLD mode, bull flag mode here, okay? So we've got bullish trend. Now, we'll see what Monday brings here. Let's zoom in. We've got bullish trend. We're going to identify the low day. I'm going to assume that today is going to be a low day. We don't know for sure. I'm going to identify the high of that day. The high here is 176.54. Okay. How do I know that? Because I looked right up here where it says H, and if you look at that H there, it says 176.54. My entry is going to be if we break above that. That would be a touch or a break above the high of this low day. In the context, and this is key, in the context of an overall trend going up, okay? Just because we get a CAHOLD, if the stock is going down, that's no good. Similarly, look, is this a close below the low of the high day? Yeah, this would be like a perfect bearish entry if perfect, meaning you following these rules. Perfect doesn't mean it's guaranteed. If we're trending down, but we're not trending down here. We're looking for the bullish trade, so we're going to be waiting for the bounce here on this. And I wrote down that price, 176.54. So let's do a trade here. Let's do a trade here. Now, bullish trade, could we do just a stock trade? Yeah, we could do a stock trade, but that's not the subject of this class. Could we just do a long call? Yeah, but that's not the subject of this class. So what I'm going to do here is I'm going to go to the Analyze tab. Actually, let me do this. Let me go to the Trade tab. And let's do a trade that maybe you associate with more neutral, but we're going to make it more bearish. Okay? We're going to skew it more bullish. Okay. And so that's what I'm going to do. I'm going to look for a skewed butterfly on this. Okay. Mix it up a little bit. We don't do skewed butterflies all the time, but we're going to do that. Let me answer a couple questions before we do that, but that is what we're going to look for there. Okay. NBA says, is there an exit signal? Yeah, it depends on the trade. That's a good question. When do you get out if we get in? It depends on the type of trade. I mean, we could use this same bull flag pattern with the bounce if I'm doing a long-term stock trade. You could. That's just your entry. And in that case, we're just going to hold on to it maybe as long as the stock continues to trend up. Or we could set a target, for example. A lot of times on flag patterns, what people will do is they'll say, well, this was the length of the previous flagpole. We're going to take that length, we're going to add it, we're going to assume we're going to get the same magnitude of bounce that we got in the past. And we're going to do that as a target price on that. Okay. Or if things don't go so well, we could say, look, this is where our bounce is. We're getting in if we get a bounce here, pretend that's a green candle right there. Okay. But I'm going to put a stop right below it. Doesn't guarantee we're going to get out at that price, but that's a way. So it just depends. Your exit depends on the type of trade. For this trade that we're going to do, we'll look and we'll have a time exit on it. Well, we'll get to that in a sec. Okay. We'll have a time exit. We may have a stop as well on there. Okay. Yeah. Broken wing butterfly. You got it. Absolutely. That's what we're going to do. Okay. Sailing Joe said, how many candles should we wait before deciding whether it's been broken or is no longer valid? Okay, so I'm trying to understand. So if we get a bounce, let's say we got this bouncer. I'm going back in history because we don't know what this is going to say. If, let's say it doesn't break, it doesn't go, we're looking for a break above here. How many days? Ooh, I don't know. I'd give it 2 or 3 days typically. Of course, if the next day is like down here, then that's a different story, right? Then we're completely breaking the pattern. We're breaking the trend on that. Otherwise, I'd give it a few days. I don't have an exact number, maybe 3 days, something like that. If we just kind of go sideways, sideways, sideways for a long period of time, then we're probably, a week or more, probably at that point going to give up, be a little, I'm not going to be patient with it at that point. So, okay. So, so Harry says, does the high or low refer to the open or close the body? It's the wicks, it's the shadows. It's the very bottom, the very low. Notice if I put my cursor on this, and if you look up here, we have OHLC up there. Let me just do that. O is for open price, H is for high price, L is low, C close. The O and the open and the close are going to be defined with the body of the candle, but the high and the low, it's going to be the furthest extension of the candle there. Okay, so let's go back to our trade here. And let's just go here. And I'm going to go out to 22nd of August. Okay, so we're giving it about 3 weeks time. Yeah, that should give it time to work. We're not planning on holding it probably the whole time, but I'm going to go 22nd of August, and I'm going to be kind of bullish on this. So what I'm going to do is I'm just going to switch this to a butterfly first of all. Butterfly spread. Okay, we've got a butterfly spread. Now, some of you are going, butterfly spreads are neutral spreads. Well, yeah, sort of. We're going to skew it up a little bit. First of all, we're going to shift the strikes up a little bit above where we're at. We're at 173 right now. I'm going to put the middle strike at 180. So I'm just going to click on this. Okay, but I'm going to do more than that. I'm actually going to shift my lower call down to a 170 strike. Okay. Notice, well, the wings on that butterfly are now no longer equidistant. 170, 180, 185. Okay. So we've kind of made it bullish in two separate ways. One, by adjusting even the center strike up higher than at the money. Okay. If I wanted to be more neutral, I'd go pretty much out the money there. And I also shifted the lower call down. Let's just take a look and see what this looks like here. I'm going to analyze this trade. Okay, let's see what it looks like. This is what it looks like. Okay, let me just adjust this so you can kind of see the prices on here. Hopefully you can see that here. So do you see how we made this more bullish by doing what we did? It's a normal butterfly looks kind of like this. Okay, kind of symmetrical, right? And it's just a neutral trade where we want the stock to stay kind of right there. Well, in this, because we skewed it more bullish, where's our peak? Well, our peak is that middle strike, 180. That's still the middle strike. The stock right now is, one sec, let me get on my drawing tool here. The stock right now is 173 down here. So we've definitely shifted this to be more bullish. We want it to go up. And you can see kind of our break-evens are pretty close to where the current price is. So we need it to go up. We have a limited loss on this. The max with $350 is basically the max loss. Here's our peak gain, and it doesn't matter. Now, ideally, it goes up to 180 and stops, but if it keeps going up, that's okay. We never get into losing territory again on this trade here on this. So we're only going to get in if we go above 176.54, first of all. Okay. So we're only going in if the stock goes above about this level, right about here. And that puts us in that nice little zone there. Now, if I were super duper bullish on this stock and I just thought it was going to just go to the moon, so to speak, maybe we do a long call or something like that. Because this, this kind of wanes here so much, a little bit. It doesn't do so great if the stock goes up. We're still making a little money up there, but not nearly as good. But so this is bullish, but not super duper bullish. Okay, let's leave it at that. Okay, so we have when we're getting in. Now I'm also going to say, look, I'm going to get out of this trade if this support doesn't hold. I've got a moving average here, about 170. If we go down below this and we break down here, say 167, I'm just going to get out of this trade. Okay. 167, we're going to exit. Now, we're not getting in until the stock goes up here. So that'd be a significant drop, but that would definitely be a change in the direction on this. Okay, so I'm going to go back here. I'm going to make this a first trigger sequential order. I'm going to right click on this. I'm going to create an opposite order to get us out. This one we're only going to get in. I'm going to change this to market, good till canceled. I'm going to click on the gear over here. I'm only going to get in this trade. Okay. Now I think it's showing up on a different window. Ah, crud. Okay, hold on one sec. I'm absolutely stuck here. Sorry, my thinkorswim is now stalled out here. Yeah, it's not letting me do anything here. One quick sec here, folks. I apologize that. I'm going to have to shut down. Wow, this is stuck. Yeah, give me, yep, let me just do a reset real quick. Okay, everybody, I'm just going to take a quick break here. I'm just going to see if I can get reset my thinkorswim platform. Give me probably 2 minutes here. So give me 2 minutes real quick. All right, I am back, everybody. What happened, I think, was this window, when you click on that order rules, it brings it up in a different window, and which is fine, but it just got buried behind some other windows and it wouldn't let me do anything. So anyway, that is what happened here. This is what I wanted to do is I wanted to come over here. I wanted to put some rules here on this. Okay, rules on when we're going to get in. We said we're only going to get in if the stock goes above 176.54. So I clicked on the gear and we're going to just put this in at if NVIDIA marks greater than or equal to 176 point, we'll say 55, okay? I'm going to click on save. There, I have a rule on this one. And now it popped up normal, okay? So, on my sell, we said we're going to get out of this. Where did we say we were going to get out of this? We are going to get out of this if the stock goes below $167. So I'm going to make this market, good till canceled, and we're going to get out if NVIDIA marks less than or equal to $167. Okay? We're going to save that, and there's the trade. Now, there's the trade. Notice I did 1, 2, 1 in terms of contracts. That's a butterfly spread. I did it unbalanced. In other words, the difference between the strikes is different. They're not equidistant. And there you go. Now, you could do some multiple of that. We could do 2, 4, 2, or 3, 6, 3 in terms of strikes. There. You can also play with this. Kelly said more width on the wider strikes gives you better downside max loss, more risk. Yeah, you can play with those strikes a little bit there and find exactly what you want. And we can get out there. Now, Chris said in the chat, good thing. What if we get out at 50% or better? Yeah, you can certainly do that. Absolutely. you don't have to hold on for 100% gain. In fact, on normal butterflies, that's absolutely great. This is skewed. So if this continues to go bullish on this, then you're in good shape. But can we get out of that? Yeah, we can get out of that 50% gain, max gain as well. I think that would be that's a sensible management approach as well on this. So let me just do this. I'm going to put this trade in and real quick on this, and we got the trade in. Okay, so it's thinking. We'll see if that fills or not. Okay, I want to go through one more example, and then I want to look at our example trades here from last week as well. Okay, let's go to GE. Okay, so I'm looking at GE. Now this is one where we have the trend up. We kind of have a flag pattern. This actually, we have a bounce already on this. If we're looking for a close or a touch above the high of the low day, again, we can look for something above today's high. Even though this candle is a green candle right now, today's high is 270.55. Okay, so we can, now that could occur very early tomorrow or Monday, I guess, if the market opens up higher Monday morning. Okay, but let's look at a different type of trade here on this one. Okay, and again, this is an advanced options class, so we're going to use a different type of trade entirely, just to demonstrate that. Would some traders call this bullish enough to get in? Yeah, some traders would say, hey, this is actually a fairly bullish candle. We opened up lower. At some point during the day, we actually tested a little bit below that 20-day moving average, but we're closing near the high. That won't closing. We still have another hour of trading in the day, but right now we're near the high. So for some traders, that may be bullish enough. But if we're going to go with the close above the high, the low day, we're going to assume this is the low day. The high is right here, right where I'm pointing. The high is right there. If we get a break above that on our next candle, that may be your entry right there. For some traders, that may be your entry. Now, what if Monday were even lower? Well, then we do not have, if we're down here, then this isn't probably going to be the low day if we're lower on Monday. Then we've established a new low. Now, if we start to get down here, then the flag is going to be as big as the flagpole, and it's no longer going to be a flag pattern at that point. Okay, so let's do a quick trade here. Okay, and what I'm going to do is I'll stick with this August 22nd. I'm not going to do a butterfly though. What I'm going to do is I'm going to do a diagonal spread. Again, I'll make this one bullish. I'm going to sell out of the money just a little bit. So I'm going to click on the 275 call. I'm going to go out to September 19th. And I'm going to go kind of closer to at the money. And I'm going to do the long call. I'm going to hold down my control key. And this is a diagonal spread. Let me just right click on this and analyze this trade and see what we look like. So this is what it looks like. Again, a calendar, if we did the same strikes, would be a totally neutral trade. This one we skewed bullish. We've skewed this bullish. The stock right now is at 260. Now, stock right now is right here. Okay. And you can see if it goes down a little bit, it's not too bad, but it gets worse if the stock goes down significantly. So again, what we may do is we may say, look, I'm going to get out if we break below our low here, 261. I'm going to get out, and we'll actually go give it a little wiggle room down there. I'm going to go about 1% below that. So I'm going to go to about to 258. And we're going to exit. And we're only getting in if we go above the 270 level. And we're going to hopefully let time decay do its thing on this. So what I'm going to do is I'm going to go back to my trade tab. I'm going to make this a first trigger sequential. We're going to create an opposite order. I'm going to make this a market order. We're getting in, remember, only if that stock goes above 270.55. GE marks greater than or equal to 270.55. Okay, we're going to get out if, click on our gear, if our stock goes below, marks less than or equal to $258. Okay, so that's going to put an exit on the trade in case it goes south on us. The good news is if it does go against us, it's not like we're getting to a max gain immediately, typically. Usually you have some wiggle room. The time decay, it takes a little while to kick in, and really you can see it gets a lot worse when we get down to the 240, 230, 250 range. But if we're going to 260, the loss isn't as much. These aren't huge movers in terms of trades there on that. Okay, I'm going to confirm and send this, and I'm going to throw this in my calendar category there. We'll put that in. And then finally, let me just wrap up talking about last week we did some earnings trades. Okay, we did 2 earnings trades. We did one on Visa. This was a play on a lack of volatility. We didn't want Visa to move. And so what we did is we got in for a 129 credit. We got out for I got out as 2 separate verticals for about a 30-cent debit. Okay. Why was that? That was a successful trade. Well, what happened was, here was earnings, and the stock kind of has subsequently gone down a lot, but we got out right after earnings. So because of the volatility crush, it worked out very well for us. The other trade didn't go so well. The other trade was on Microsoft. We put in an earnings straddle on Microsoft. We bought it for $21.35. And I close out for $20. So less than what, so we lost a little bit of money. Actually, it wasn't too bad. We lost a little bit of money on Microsoft here. Let's just look and see. Remember, a earnings straddle, we wanted a big move. Initially, we got that big move. I was a little slow to get out though, and it had dropped quite a bit. And with the IV drop, that actually hurt us because this was a long straddle. So we got out with a small loss. If I got out a little earlier, like right at market open, there's a good chance I would have got out at a profit on that trade, but I don't know. Okay, folks, there we go. We talked about flags today. We talked about Coholds. And hopefully that's helpful, not just for these trades, but for other types of option trades as well. Remember, there is a survey link in the chat. We'd appreciate your feedback. Topics for the future, you can always put that in the survey. Connie, thank you for helping me on the chat. Thank you. Myron's asking what a vol crush is. Check out last week's website. Check out last week's episode, webcast, and I talk all about volatility crushes, where volatility goes way down on these trades. So, okay, everybody, have a wonderful rest of the day. Oh, coming up next, we got market movers. I'll actually be teaching that one as well at the top of the hour. So, we'll see you in about 15 minutes or so. Bye-bye, everybody.